with an update on the Nigeria equity market. It's been coming down a little bit over the last 6 sessions. We'll see if it extends today. And then we'll also be speaking to the CEO of Main Street Bank, one of 3 banks that AMCON has said they would be selling to new investors by next year. We'll be speaking to the CEO, Faith Tuedo Matthews. And lastly, we look at the Lagos Chamber of Commerce and Industries June report on rebasing Nigeria's GDP. With Vincent Wani, he's the director at the Chamber of Commerce. That's what you can look forward to on the show today. Of course, you can send us your comments or ideas that you may have for the show by emailing us on powerlunch@abn360.com. You can also follow us on Twitter. The handle is @powerlunch360. Let's move on to the markets. Like I did mention earlier, the market has been sliding over the last couple of sessions. Today, right now in early trade, it is down about 0.8% to 36,721 for the NSE All-Share Index. The laggards today so far include Dangote Cement. We have seen a bit of pressure on that share price recently. Lafarge Waco is also been under pressure, and NACO. Let's now cross to Don Lauren Merrifield, where Oyakilome Ibagui, an analyst with investment research, is standing by to give us some perspective on the market's trend. Thank you so much, Oyakilome, for joining us.
Yeah, good afternoon, Wale. Thanks for having me.
The market continues to slide in early trade today. Your thoughts about this slide? Is this something that we're going to have to live with for a while? Because some people were suggesting yesterday, because we did see the market fall back only a little bit yesterday, and there was a thought that we may be seeing a support level for the index, but at this point in the game, at this stage of the game today, it seems the market is continuing to slide.
Well, this is definitely not unexpected, considering that historically, at the end of June, the market has always trended downwards. So the dip in the market by 0.16% yesterday is expected, in line with the historical trends. I enjoin you to just go over historical data, and you get to see that towards the end of June, the market always recedes. And so what we are seeing nowadays in the past 1 week or so is in line with the historical trends. But going forward, I believe that the investors exiting the market now, and they're exiting the market for reasons that are founded. For example, the market right now has a Sortino ratio that is declining. The Sortino ratio is a way to evaluate the returns on a stock, adjusting for downside risk. Yeah. So the Sortino ratio is currently declining now, signifying that some of the upsides that investors envisaged had been reached, and so they are exiting their positions. But I believe that in the middle of the 3rd quarter of 2013, investors will come back when valuation ratios look more attractive. They'll start taking position once again, and the market will start gathering momentum going forward from there. Right. So what we are seeing now is not really a red flag, so to speak. It's in line with historical trend.
All right, so Sortino ratios, I learn something every day. Interesting perspective there. Okay, so the market seems to be due for a correction, like many people have said. So in this environment, in this context, what are the stocks that you think that investors should begin to put money in?
Sorry, Wale, I didn't get that.
I want to get your thoughts, your stock picks in this context. The market is sliding. It's probably opening up opportunities for investors. Which stocks do you like?
Yes, it is opening opportunities for investors, because the sell-off that we are seeing right now is increasing the upside potential of some stocks that we are bullish on. One of those stocks is Dangote Cement. We believe that Dangote Cement has a lot of value because it has strong operational efficiency. Its liquidity position, well, not in the best of positions right now, but it is not bad. It has one of the highest margins of all companies listed on the NSE. And we expect the company to outperform on the back of the various infrastructure deficits that we have in the country right now, housing deficits, and the expanding middle class, and the fact that Africa as a whole currently lags behind in terms of infrastructure. And so going forward, there is going to be development. When there is going to be development in infrastructure, then there is a very high likelihood that cement will be needed. So the demand for cement will be sustained. There is no doubt about that. And because there is no doubt about that, then we expect cement companies, in fact, the cement industry, to do very well in the medium to long term. Yes, there could be disappointments short term, but in the medium to long term, we expect cement companies to do very well. And one of such, yeah.
Sure, I think a lot of people will argue with the case you're making, but the big question is the valuation. And I think that's where people are split. Your thoughts on the valuation right now? Well, is it justified at this stage?
I think for Dangote Cement, I think the multiples right now, the PE and other trading multiples, can well be justified by the view that we have of the company's earnings potential in the medium to long term. Right now, I believe that investors are willing to pay more for the stock of Dangote Cement. That's why you see that some of the valuation multiples seem overpriced. But in reality, relative to the earnings growth which we see as measured by the PEG, because we don't just look at the PE ratio alone in our investment units. We also look at the PE ratio in relation to the earnings growth. And because we believe the earnings growth for Dangote Cement is substantial, then the PEG ratio is at levels that investors that are value inclined, because we have value investors, we have growth investors, and we have income investors.
Right.
For value investors, we believe this is the time for them to start taking positions, because by the time the stock starts playing out its true value, people that are not in the market right now and in the stock right now will have a feeling of what I call regret.
Okay.
So
let's,
for that not to, yes.
All right. Very, very well articulated view on Dangote Cement. What about Total? It seems that's another stock.
Well, Total is a company that is situated in an industry that is highly regulated by the government. But be that as it may, the company has done all its best to ensure that its operations are A-level operations. By A-level operations, I mean that the operations are of high standard. If you look at the company's network today, you see that the company has a retail network of over 500. And currently, the company signed an agreement with Etisalat so that Etisalat can have some of its stations, at the various retail outlets of Total. This means that people going to Etisalat will be somewhat compelled to, if they have cars or if they need fuel, buy fuel from Total. All this translates into an improvement in Total's revenue. And also the PIB, which is being expected to be passed, I believe that will be of a huge advantage to a company like Total that has a wider, scale network, because once the downstream sector is eventually deregulated, then a company like Total will benefit hugely from this, compared to a company like Mobil that has just very few retail networks and is investing a huge amount of its funds in real estate.
Okay, so fingers crossed on the PIB being passed, and if that happens, of course, that will be positive for the industry.
Of course. It will favor a company like Total and Owando as well, because Owando also has a wide network.
All right, let's leave it there.